I would come to the office every day to basically sell money, right? Commercial mortgages, and I loved doing it. I really enjoyed the process, the negotiation, the sales. Turning a cold prospect into a strong relationship. I loved that process and that dance with building relationships.
Rich, welcome to the show today.
Thank you, Mr. Blanc. Long time listener. Very excited to join you and be a part of your wonderful podcast.
That's cool. And
Thank
you're
you for
joining us
having me.
from Egypt here today, which is kind of cool. It's your
Uh,
evening there.
we are in Egypt today, and I think look, it's something that you've touched on in a lot of your podcasts, which is why are we doing this? Why are we doing multifamily investing? Why are we investing in commercial assets? It's to have freedom, and I've been fortunate for about the last year or so to effectively be living out of my suitcase. And so yeah, we're here today in Egypt in June, so it's quite warm, but saw the pyramids, saw the Sphinx, and enjoying it. Pretty ready to settle down after a year in my suitcase.
Well, you're doing this by choice. Obviously, you decided that you're going to go see the world.
Yeah, so this was kind of precipitated about well about a year and a half ago when we recognized it was challenging to continue to add to our portfolio given the interest rate environment. So kind of took a little bit of a sabbatical hiatus from buying new deals, and but again, this is the beauty of multifamily investing, that it provides that cash flow that allows you to weather storms like the storm we're kind of living through right now.
Yeah, I definitely want to talk to you about that. I do want to talk to you also about kind of your history here because you got started in an early age in investing in commercial real estate and apartment building, that kind of stuff. And you had a really successful W-2 career, right? What was wrong with that? Like, why would you throw that away? Why did you get into real estate? What problem were you trying to solve at the time?
So just to back up, so I'm 33 years old, and I started right out of college in the commercial mortgage banking business. Um, and my timing was very fortunate, right? Because from 2013 till 2022 was one long bull run with respect to commercial real estate values, and also interest rates just went in one direction during that period. So I was very fortunate with that timing, where I had so many refinance opportunities where clients were coming to me looking for cash out refinances. And so it was a great business. I became a partner, and it. But what I recognized one day, and this was probably about 7 or 8 years ago. So I'm a partner in the mortgage business. I don't yet own any commercial assets. I do own my condo, and one of the benefits of working in commercial mortgage banking is you have access to the financial statements of your clients. And so I was regularly reviewing personal financial statements of people who were worth 25, 50, $100 million. And so one day I'm looking at one of my clients' tax returns. Keep in mind, this guy was worth $50 million. I, at that time, was worth just about nothing. And I was looking at my tax return, I was looking at his tax return, and I paid more in taxes than he did.
Isn't that the darndest thing?
And so I recognized in that moment, okay, I'm making a good living here, but clearly I'm on the wrong side of the table. And so in that moment, I kind of had an epiphany that the true wealth is comes from being on the principal side, being on the ownership side, rather than being on the transaction side, whether you're a investment sales broker or a mortgage broker. Um, so, and the other benefit was in 2000, beginning in 2017, a new president came into office, and one of the things that he instituted was a pretty radical tax reform, and that allowed for cost segregation or 100% bonus depreciation. And so, really, beginning in 2017, the strategy was make as much money as possible in the mortgage banking business while also buying assets, cost segregating those, and then getting to the point where I'm paying very little in taxes on my earned income. But but the question is yes, there did come a point where um I didn't want to be tied to any one company. I didn't, and what I found when I was working with borrowers, with clients, the reality is sometimes clients will mistreat you. And I got kind of fed up with that, fed up with having someone to answer to. And so in early 2022, I just went all in on myself, all in on my relationships with my investors.
But what did that look like? What did that transition look like? Because a lot of people they'll maybe buy a rental or two on the side, and like what did that transition look like in practical terms?
So, one thing that might be interesting for your audience is that I actually have not pursued the syndication model. I understand that that's the vast majority of your listeners are interested in that model, but I actually pursued the joint venture model. So I've never done a syndication, but instead, what I did was I did joint ventures with very high net worth individuals, and those individuals were actually my mortgage clients. So I was basically able to convert what were my mortgage clients into my investors. So I was fortunate that I avoided that whole process of marketing and having to find equity because that equity was just there. Now, starting in about 2020, what I did with these select individuals was they owned hotels. Okay, and I think we can all remember what happened during COVID. COVID was not great for hotels. So in that moment, they it became apparent to me that they wanted to divest of all of their hotels. And I saw that as an opportunity. I was like, okay, let's sell off your entire hotel portfolio. Let's do 1031 exchanges into apartments. I will oversee that entire process, and I will get acquisition fees, some other sweat equity, some asset management fees. And that ended up being very successful. They've now sold off their entire portfolio of hotels. And we now own, about $90 million of real estate. There's some medical office, there's some retail in there as well, but the rest is multifamily. And another unique thing is it's multifamily in San Diego, California. Not exactly a syndicator's best friend in terms of markets.
Yeah. Well, so why did they take you seriously, Rich? Because they know you as the mortgage guy. Like I wouldn't when I'm thinking of who should I joint venture with to expand my portfolio. My mortgage guys may not be anywhere on the list, right? So why are you on the list of these people who have built their own portfolios of hotels? Why would they consider partnering with you? What makes you a trusted expert or partner?
That's a good question. So I think I had already at that point, prior to 2020, purchased a couple of my own commercial assets. So I think I had already demonstrated some credibility to them with respect to finding good assets and operating them. So that's number one. Number two is I had been arranging their loans for 5, 6, 7 years. So I had already established trust. And I think if there was one sales pitch, it was that, look, um, I can do as good of a job as any sponsor, with respect to finding great opportunities. I have relationships with all of the brokers. I know how to negotiate. So I'm gonna replicate all of those things that a sponsor would usually do. But my unique value add is I am going to, on top of that, throw in a financing service, right? I have all the relationships with the commercial debt service, and oh by the way, I'm going to provide that service for free. So it was, I'd say, if there was one kind of catalyst, which is actually the name of my company, it was the fact that or that was kind of the one niche was, hey, I'm going to do everything that a sponsor would usually do, but I'm going to throw in this additional service which will save you a mortgage banking fee, which
That's
I'm sure you're used to paying that fee on
yeah,
most
that's that's
transactions.
that's that's attractive. That would definitely be a factor. And now you mentioned that you had bought some of your own properties before then. So what was like your first deal that you've done? What did that look like? Because you said you kind of bought it yourself.
So look, I think it's important to say that um, again, I'm very lucky to have good parents, and not only did my parents give me a great upbringing and childhood, they paid for my university, and they also gave me the majority of my down payment on my first condo. And the reason I bring that up is because yes, I was making good money in my mortgage banking business, but what really fueled the growth in my portfolio was owning this one condo in a great neighborhood in San Diego, buying it in 2015 and having it appreciate so much that I was able to, on two different occasions, take $50,000 out of that property via cash out refinance. So that was actually my first deal. Was really a generous gift from my parents. But then in 2017, I bought a retail property, which I still own to this day. Um, and you know, the retail property, even to this day, provides the majority of the cash flow that I live on. Um, and it's actually a retail condo, which I don't necessarily encourage investing in retail condos. But man, it's been really fascinating to see in this last 15 years or ago or so is everyone was predicting the retail apocalypse, right? And I think if you look back to 10, 15 years, retail has been one of the top performers of all commercial asset classes. Um, but eventually, again, 2020 hits, and I recognize that multifamily um, was a bulletproof asset class, especially in a market like San Diego, where there's no land left in San Diego. So it's San Diego is a fascinating market, in my opinion. It's the best market in the country. Maybe not for syndicators because the yields are so thin, but from a supply standpoint, I mean, think about San Diego. To the south, you have Mexico. To the west, you have an ocean. To the north, you have a military base, Camp Pendleton, and to the east are mountains. So it's and look, and what we've found is that San Diego's really benefiting from what appears to be an unfortunate exodus from Los Angeles and San Francisco. That probably gave you more than you were asking for, but
Well, here's the thing. You had some of your coworkers in the mortgage company, and they are still doing well. They're not doing real estate, right? So why did they not do real estate, and you decided to do real estate? Because look, I mean, there's a lot of people that actually have access to capital, and you were able to leverage it, and you borrowed money from your parents. You happen to live in an appreciating real estate asset, so you were able to leverage something. But there's other people that have access to the same kind of capital, yet they're not investing in real estate. What's the difference?
fear. Yeah, I'd say one other kind of thing that woke me up is I would come to the office every day to basically sell money, right? Commercial mortgages. And I loved doing it. I really enjoyed the process, the negotiation, the sales, turning a cold prospect into a strong relationship. I loved that process and that kind of that dance with building relationships. But I remember one day walking into the office, and there was another mortgage banker there, and he was 65 years old doing the same thing I was doing. And even though I enjoyed it in that moment, I think I recognized, man, we only live once. And do I want to be doing this same thing 40 years from now? And the answer was no. And look, the truth is, Michael, like your podcast was was a really big part of this. Other podcasts too, where I was like, this Michael guy, he's very normal guy, and look at what he has achieved. Because I think had this podcast world not existed, I would have I would have just had this mindset that, oh, big, bigger multifamily deals, those are just for the guys in suits on Wall Street. So I think it was actually a lot of it was exposure to people like yourself to convince myself that, hey, this is possible.
Yeah, that's really really important, right? Because so many people, especially if they're in mortgage or real estate brokerage, very few of them make the transition to the other side, and you have, and I think it's overcoming that fear. And and for you, it was like looking at someone who's 65 years old and like, I don't want to be that guy. I don't want to do this for another 30 years. And now, how did you just overcome that fear? Because the fear is still there. You're like, okay, I know if I keep doing what I'm doing, I'm going to end up like that guy, which I don't want. But then I still got to deal with this fear. I still have to now learn something that I don't know. I may have to put money on the line, which I may lose. And how did you then overcome that fear?
I think listening to people like Tony Robbins too. I mean, I'm talking about non real estate people, other motivational people that talk about the fact that anything that's good in life is on the other side of fear, you know? And but I remember the first 10 unit building we bought. I remember being at the inspection and feeling overwhelming imposter syndrome. Um, but the deal still closed. And I think what I recognize, and I think what your students recognize, and what you've recognized yourself, is that you don't need to, in order to be successful in building a portfolio, you don't need to truly understand every minute detail and facet of the business. um this is a team business, and I think once I recognize that, like, hey, as long as I find a great property management company, I don't need to know how to replace do certain plumbing jobs and as long as I find the great insurance agent, I don't need to understand all of the little intricacies. As long as I can put these people around me that I trust, I can still scale this business, um, while still feeling like I'm delivering on everything I've promised to my investors.
Yeah, it's so good that this is a team sport. And with many other businesses or anything else that we do, you don't have that. And in this case, you're always building a team, which is why you can scale this business more than anything else. What was like, in my career, I probably have learned the most things from things that didn't go so well, setbacks, challenges. What particular hairy challenge that you had to go through, and maybe what was a lesson that you learned through that, or a growth period?
Yeah, there's been a lot. I would say, look, cost segregation is a beautiful thing. You and I have both benefited from that. Unfortunately, the bonus depreciation is being reduced. But the reason I bring that up is I did have a couple years where I thought cost segregation would completely wipe out my tax liability. And then I found out in that first year that California does not recognize bonus
So you
depreciation.
spent all your money,
Also,
and then you nothing
yeah.
left for taxes.
So yeah. So and then the other thing is, I recognize that when you're doing a 1031 exchange into a new property, I learned a thing or two about your basis. And so I would say those, having to come up with some really big checks to just make Uncle Sam and our California governor happy. Those were some big moments that really stung.
So how could you have prevented that? Because like you said, you can't know every single detail. Is it maybe a team member you didn't have, or the right team member who advised you properly? Like, how could you, in hindsight, have prevent that in the future?
You know what? You know what, Michael? And this is something that this is probably a flaw in my business, is that I'm still kind of a one-man show. I do have a full-time employee, kind of asset manager, given how much I travel, but I don't have a co-GP. I don't have another sponsor. And had I had that, maybe I would have protected myself from this and other, and look, here's another challenge that happened. I didn't have adequate reserves on a couple of properties, so I've had situations of capital calls, and fortunately, with high net worth JV partners, capital calls aren't a big deal. But the reality is, because I had to call capital, um, I lost credibility in that moment.
Now, you've already achieved a great success, and you're obviously gallivanting throughout the world. But if you look back on your career since 2017, or maybe even before, what are some of the things, especially if you could talk to your younger self, what are some of the things that you would maybe do differently?
I'm thankful. I'm thankful for all of my mistakes. What would I do differently? So what I found, and I'm sure you find this as well, Michael, is that our whole business is momentum. If success is one thing, it's momentum. And I found, whether it was when I was working in mortgage banking, or when I was buying, what I'm doing right now, buying properties for myself, in those moments where I'm building momentum, and I'm consistent with my workouts every day, and I'm putting in the work, and I'm taking action, right? I'm erring towards action versus preparation. Um that good results came from that. So the reason I bring that up is, I have had periods of complacency in my professional life. And sometimes, if you're complacent for too long and you kind of get stuck, the longer you're in that headspace, the harder it is to break out of it. So if I could do it all over again, I would like to avoid those periods of limited growth, and just remind myself that every day you need to take action and move forward. Because I think what I've learned is, kind of semi-retired a year and a half ago. I had enough assets to, and I kind of thought that I could just hang out at the beach, basically. And what I found was, um I lost a lot of fulfillment. Um and so I think, if I could rewind the clock, the message would be, always, even when you don't know what to do, find a way to take action that one day and move forward. Because the truth is you're either growing or you're dying. There's no staying at the same level. And I think I learned that lesson the hard way.
Interesting. Now, you said just earlier in the beginning of the show that you're getting a little tired of traveling, which is absurd, of course. But talk to me about that. Are you feeling maybe like you're becoming a little complacent, or what's going on?
Um, okay. So traveling is the best thing you can do, I think, professionally, for your soul, for personal growth, for everything. I was in a city called Florianopolis, Brazil, and I met what I call the wise man of Florianopolis. And he asked me, and he told me something. He said, "What is a point of view?" What is a point of view? Well, a point of view is just a view from a point. And so the more views from points that we can accumulate, the more interesting of a point of view we will develop. So I love traveling. I've experienced tremendous growth from it, but I've also found that traveling for a year nonstop is excessive, and you start to miss structure in your life and routine. And so I'm ready to get back to that. But I am making a big leap by moving to Brazil, once this is all over in a couple months. The south of Brazil, Florianopolis, best place on the planet.
That's pretty cool. Well, and you've seen some things in the world. I've traveled sometime in the 2000 for like, and I after about 30 days, I felt my brain slowing down. I was like sleeping 10 hours a day, and it was weird. I mean, it was wild. I was like, oh, I think I'm sick. Like I felt myself just slowing down, which is actually not bad in my case because I'm a little wired, and so it wasn't bad. But then it went on for a few days, and I felt kind of really kind of starting feeling anxious. And I think the comment you made about, always be growing. Like I don't want to be the same person I am now a year from now. Like I want to be different. I want to be hopefully better. And I've had a bout with complacency as well, specifically when I was doing my pizza restaurants. I was meeting with my guy once a week, counting my money, patting myself on the back. I had no idea. I had met half of my managers, and so when everything started going to hey, I was the first time I met like half of my managers. They're like, "Who are you, dude? I'm the owner." I had gotten so
Mm.
complacent. I didn't really know what was going on, and that was a big lesson for me. And also in those times, you're not really growing either. I think that was probably the worst. Yes, I kept my eye off the ball, let the business kind of go bad. But worse, like you said, is like you stop growing, and it does take a certain amount of fulfillment out of your life if you're not growing. So you're going to Brazil. That's pretty cool, Southern
Yeah.
Brazil. And then kind of what's next to you on your growth path?
So I just want to ask you one question on that follow up. In that period of complacency that you experienced, did you start to feel like your ambition was slowly also kind of being sapped out of you?
Well, yeah.
Because
So
that
to
was my experience.
Yeah,
Yeah.
yeah, yeah, because what do you need to strive for? You already have everything, right? You got enough money coming in, you got time, you're healthy, you're living in a nice house, a nice car, and I think a lot of people are affected by this, especially more high income earners, right? That live in the suburbs, great life, and that inertia is so strong. So I I now get a little paranoid if I get too comfortable for too long, which is not right now. I'm not in this problem right now. It's a little bit on the other end of it. I don't have that problem
Mhm.
right now, but when I find myself going through that, I get a little paranoid. Like I like it for a little. I like to coast for a little bit, but then I was like, uh oh, something's not right. Like I need to aspire to something. I need to develop some kind of ambition,
Yeah.
not
Yeah. So I
maniacal.
would say I'm still dealing with this challenge, right? Because the truth is we did buy a large deal last year, a little deal earlier this year. We're about to be under contract on another 16 unit deal here in San Diego. 16 units, $9 million. That's San Diego pricing. And
Yeah,
believe it or not, that's a steal.
right.
Um, so I am working on these things and I'm focused on the asset management, adding value. But we all as men, or we all as human beings, we need some big mission to be working on. And if you lose that, and again, I kind of found I lost that briefly when we weren't buying a lot of properties and when I sold my equity interest in the mortgage business. I didn't have that guiding kind of north star, um and I learned that's something we all need. And it doesn't necessarily have to be buying more multifamily buildings. It's there's charitable pursuits. There's dedicating yourself to one hobby. But if I could leave your audience with one kind of larger piece of advice, is make sure you have that one thing in the morning that makes you jump out of bed.
It's funny. Financial freedom is a funny thing because it causes a temporary sense of confusion and identity crisis because your life has been so tied up with, well, earning money, providing for a family, and all of a sudden your purpose has disappeared. And so I see in a lot of people. It's really kind of entertaining sometimes. I just sit there at 2:30 in the afternoon. Their wife's like, "What are you doing here?" I'm like, "I don't know."
Mm.
And it's interesting, but it presents people with an unprecedented challenge where they have this void or vacuum in their brain, and now they have to grapple with filling it with something. And before, you never had the luxury because your brain was always as full, it was actually overflowing, and now you actually have the luxury of thinking about what you can actually do with your life. It's really fascinating. It's like, what are you going to do when you grow up, Rich?
Exactly. Yeah. I mean, when I told people that I was semi-retired at 31 a couple years ago, people laughed at me. But it was the truth. Um, but yeah, it's I suppose it's a good problem to have. I guess to be in the self actualization uh part of the Maslow's hierarchy of needs. Um, but again, I don't want to sound like a victim here because it's a good problem to have, but um I'm not alone in having this challenge. There's people who sell businesses for a lot of money, and they end up um, maybe with some depression, feeling lost, feeling anxious. How have you seen other people kind of get out of that rut?
Yeah, I mean, some people do, some people don't. It like you said, it is a real problem, especially people who exit a business. And again, it's an identity crisis, and some people deal with it, and some people don't. I find that people who grapple with it are the ones who never dealt with it beforehand, because it's not like they sell their business overnight. Oh gosh, there's my business gone. No, it's been in a process for months and years, and they don't actually think
Mhm.
about what's afterwards, and so they kind of get surprised by it. And I know a few people who exited their business, and some are doing well, and some are doing not as well. I think the problem is that we have to develop an identity outside of kind of what we do. And it's hard to do because you have so much time is spent doing these things that you're doing, but then when you're no longer doing that, you have an identity crisis. So I think there's a lot of
Mhm.
introspection and reflection we as humans need to do, where we develop a true identity not tied to anything that we're currently doing. But now you have this ability to really think about that and kind of work on that and kind of figure out, hey, what's next. And the challenge to all of us here is, what do we do with our position? What do we do with this luxury of financial freedom? Do we just sit back and drink mai tais by the beach and play golf all
Mhm.
day? Well, that's great for us, yay us, but it doesn't benefit anybody else, and certainly doesn't benefit us in the long term either, because like we talked about, we're no longer growing. So it
Right.
is a real challenge, and I think that is a cool thing, is that everyone's got challenges. But I think the fact that we're talking about the challenge of dealing with financial freedom is amazing. Just the fact that we can sit here and talk about, what do we do with all of our time? I don't know what to do. We should probably maybe, solve world hunger or something meaningful like that.
Mhm.
When before, back in your mortgage job, you're not having these kinds of thoughts because you don't even have the bandwidth to think about
Right.
these things. And that's really the power of financial freedom. The question is, what do we do with it? It's cool.
Right.
Good problems to have. Really fascinating to hear your story, Rich. How can people connect with you and learn more about you?
So the name of my company is Catalyst. So you can visit my company's website, catalystcommercialre.com. See all the properties we have, and meet my other team member. I'm also active on LinkedIn. I am coming out with a course that's really designed for actually my prior life as a mortgage professional. How to go from maybe a struggling investment sales broker or mortgage broker to a top 1% performer. And so I think for those interested, that could be interesting. I also write about a lot of random stuff about my travels. I write a little bit of poetry, some politics, history, and I think maybe this is a good piece of advice for your audience: is if you want to become a great syndicator, you have to become, just like you, Michael, a great communicator. And how do you become a great communicator? Well, I think the best way is a practice of writing, and write about real estate, sure, but write about anything that interests you. I've found the more that I write, the more clear my thinking is, and the more like my verbal fluency improves.
So good, man. Really enjoyed jamming with you, Rich. So thanks so much for being on the show today.
Thank you, Michael.